Before, SDAX is Singapore's digital asset exchange, and we are a trading investment platform. And what's important to note is that we're fully MAS regulated. We're regulated by one of the best regulators in the world, which is the Monetary Authority of Singapore, and they've taken a very progressive and pragmatic approach to the regulation of this security token industry. And we'll talk about it a little bit more as well. And one thing that SDAX seeks to do is to level the investment playing field by empowering investors with the access to like the world's private market opportunities. So we've talked a little bit about how fractionalizing offers the ability for investors to now be able to buy a piece of building which they previously did not have the opportunity to. And how SDAX wants to set itself apart is by offering these institutional grade investments from world-class partners and backers, including such as Straits Trading, and to offer these in fractional tickets so that this allows investors to diversify their portfolio by investing in a wider range of assets. And because we are also running a digital exchange, our thesis is that eventually a secondary market will develop for what traditionally are illiquid assets. Onto my next slide, just to reinforce the point, SDAX is MAS regulated. And I think that's a very important point to make, especially for some of the audience who might have like worries about, digital assets. Are they crypto? You heard all this news about FTX and all these other like crypto winter type fears. SDAX does not play in that space. We are a fully MAS regulated platform. We have 2 licenses. We have Capital Market Services license and also what's known as the Recognized Market Operator license, which allows us to run this digital asset exchange. Everything that is on our platform is structured in the form of either a security or a fund unit. And as a security or a fund unit, it's imperative in that structure that there's a real asset behind it. So on to the next slide. Why does SDAX exist? Simply because there's a huge opportunity in the digitization of assets. If you look at this pie chart, the stuff that's being digitized now is just 2 trillion. It's that very tiny white line in that huge gold circle of the estimated size of traditional assets. And we are right at the tipping point of the kind of explosion of tokenization, or rather digitization of assets, as we future-proof the way that we look at investments and the way that we kind of curate our own wealth and our portfolios. Again, on to the next slide. So APAC real estate. I mean, we Asians love real estate because it's a real asset and we can touch the building. And I mean, I grew up in a family that loves real estate, so I understand that. And it's envisaged that the real estate market by 2025, in the next 3 years, is going to go up to 268 billion, which is a staggering number. And out of the entire real estate market in the world, only 0.5% is currently being tokenized. That means there's a huge opportunity for lots more real estate, good quality real estate assets to be tokenized, fractionalized, and available to investors to invest in, so that all of us can improve our portfolios. So just the last slide, why tokenize real estate? So I'll just make a comment about what tokenization means in the SDAX context. So tokenization actually is just a very, very fancy word for saying we're using blockchain technology to enable what fractionalization of investments. As Professor Singh explained earlier, fractionalizing is not a new concept. When you buy a single share in a company, you are already buying a fractionalized investment. And we've had fractionalized investments for a very long time. What's different now is that blockchain technology allows for, enables a more efficient way of this fractionalization of investments to occur. It's the way that blockchain technology has developed allows for the immutable record of ownership and lower transaction costs as we make the transaction times more efficient. On traditional like securities market, there's T+2, T+3 kind of settlement. On blockchain, you can have instant settlement. But more importantly, apart from the technology that we use, which frankly most investors do not care about, you just want to know what yields you can get and what access you can get. By fractionalizing investments, as I've mentioned before, this allows all of us as investors to diversify the assets that we are we have access to, and diversify the way that we curate our own portfolios. And as the market develops, exchanges like ours provide a regulated marketplace where all these fractionalized investments can be tradable. So the liquidity will be provided for something that's not traditionally liquid. So that's why SDAX exists, and that's why we're very excited to be in this space, working with partners like Straits Development, and also all of our backers who are also excited about the growth of this market.
So I think one of the things that differentiates us from other platforms is, number one, we've been around since 2017. Number two, we have about 7,000 plus platform users. It just means that, a lot of the opportunities that we put on get subscribed in one day. And number three is that we have a secondary exchange, meaning that there is potential liquidity for the assets that are being traded. And number four, the question we have also is about the regulatory sort of climate, right, from mass, and how that sort of changes and evolves in terms of leading tokenization, blockchain technology in the world. And this I'll pass to our Chief Regulatory Officer at SDAX to answer.
Yeah, thanks, Elaine. I'll just make a comment on the other questions on the Q&A as well. Some of you are asking what's actually on SDAX and what information there is, and we would definitely welcome you to sign up for an account. Do the accreditation, and so you'll be able to see all the investments that are on there, and also be able to participate on the markets as well. So back to the question of Singapore's regulatory kind of framework for this, I have to say that MAS has been very progressive in the way that it's thought about the security token kind of framework. And they've taken a very form over substance kind of approach where they are tech agnostic. So they have not layered on us with extra laws regarding the use of technology. So unlike other countries in Europe, and to a certain extent in the US, the use of DLT, which is distributed ledger technology, which is the blockchain technology, incurs additional legal analysis because there are additional laws that apply to that. However, Singapore has made it quite straightforward. They've applied a very form over substance kind of approach to it, which, and in our case, it is the Securities and Futures Act. So as I've mentioned before, everything that's on our platform is structured as a security or a fund unit, which means that it inherently in that there are assets that are behind it. So for example, securities in a very simple form means equity or debt or asset-backed debt. So debt which has a security, that has like a lien or a mortgage applied to it. And fund units, we all know what fund units are. So in that sense, Singapore's kind of approach to this has actually helped the industry and platforms like ours be able to kind of deal with security tokens and kind of thinking about how we structure them a lot easier. And I think it should give investors like comfort that the MAS has a very robust way of thinking about these assets. It's completely not like crypto at all. It's all backed by real world assets with real intrinsic value.